Hey, welcome back after a Labor Day weekend. We had a lot of jobs data come out here and a pretty bad short week already in the markets. This is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal is every Thursday, just bring to you the market updates and trends and some data to really consider. Hopefully we help weed out a lot of the noise and bring to you the stuff that actually matters and stuff you can actually implement or consider in your portfolio strategies. So hope everybody had a great Labor Day weekend. This is the first week back here. Obviously the markets were closed on Monday, so a little bit shorter of a week, but hope everybody had a great holiday weekend. I got a lot of golf in myself and was able to actually catch up on a bunch of things and kind of get ahead of some things for work as well. So it felt great to be able to kind of hit the ground running here this week and get started, as we move into fall, unfortunately. So let's get started here. I want to start by talking a little bit about last week. So let's talk a little about jobs to get us started this week. Friday was non-farm payrolls numbers. So for those who follow us, we were talking a lot about this last Thursday. Obviously, this was prior to the non-farms payrolls, but we had ADP employment numbers come out, very, very disappointing. And unfortunately, we put a lot more weight on this non-farm payrolls number. Unfortunately, the non-farm payrolls was also a terrible number. It came out at only 235,000 jobs added for last month versus 720,000 expected and 1 million added last month. So clearly this is not good at all. Very, very terrible to see this on top of some already terrible ADP employment numbers. And then to top that off, on Wednesday this week, we had job openings data come out at 10.9 million open jobs versus 10.2 million last month. So that number is growing and growing. And on top of that, we saw some analysts kind of suggesting some caution on U.S. stocks. And obviously that's kind of been the case here this week. So, I'm curious your guys' thoughts. We have clearly these job openings are a big issue, and we're not adding as many jobs as we were. So this week, I believe, was the first week to a lot of the federal unemployment benefits. And, I guess the question is, will the stop in these extra unemployment benefits maybe help to fill these positions? It'd be very interesting to see what happens in this coming month. So jobs data for the month of September, which we'll get as we move into the end of the month, early October, I think may really tell a story. It'll be very interesting to see if as those benefits start to roll over or end, I should say, if that incentivizes people to take some of those open jobs or if there's some sort of other discrepancies. So it may not necessarily pan out for next month's data, but definitely as we move into the latter part of the year, it'll be interesting to see if that number starts to come down a bit. But not good on the jobs front. Today, we also had initial jobless claims come out. This wasn't a terrible number. It was 310,000, which was still heading in the right direction. So that was good to see. But, again, with all the unemployment out there, all the open jobs, and not a lot of jobs added for last month, it was kind of a trifecta, I guess, in the jobs world. So hopefully that's not a trend. Hopefully, we'll see something pick back up there and see people getting back to work, but definitely something to pay attention to here. Again, let's fast forward. Let's talk about this week. So this week, Monday, the markets were closed for Labor Day. So we've had a short week and it's only Thursday here. So only 3 days so far this week. But even looking back to last week, Friday, the markets were down. Tuesday, the markets were down. Wednesday, the markets were down. Today, the markets were down. They tried to rebound a bit in the morning, but through the day, they kind of worked their way lower as the day kind of wore on. So not a good week or so here in the markets, even with a short week and even with the holiday. As we get past Labor Day, we see a lot more volume in the markets. And so, it will be interesting to see kind of how this shapes up here and if this continues, this trend down kind of continues here moving forward. Coming up next week, we've got a lot of inflation data. So we have producer price index tomorrow, I believe. We also have a bunch of inflation numbers, consumer price index, all that good stuff coming out next week. So pay attention to this. Expect to see these numbers still showing increases, but maybe slightly lower due to this Delta variant and kind of less traffic out in the world, so to speak. But I might be cautious of calling this this kind of pullback in numbers transitory myself, which I'm sure you will hear a lot about if that is the case. And then on top of that, we also have the Fed budget coming out next week. Yellen has been warning about debt ceiling again, and it'll be interesting to see what comes out of that here early next week too. So with that, we'll switch gears. We'll talk a little about our question of the week. And if you guys have any questions for us to cover, please do let us know. We'd love to cover anything on your mind. And if we end up using your question in our weekly updates, I'll send you a copy on me as well. So definitely reach out, let me know what's on your mind, and be happy to answer them in our question of the week each week. This week, we're going to talk about top 401k considerations. Tomorrow is National 401k Day. Believe it or not, it's got its own holiday. So figured we'd spend a little bit of time talking about the 401k and some things to consider. And I think what I'll do is I'll kind of break this into 4 topics, all around the 401k, but just different things to take a look at. First one is to consider the match. Make sure if you have a 401k, if nothing else, that you're taking advantage of any match that the company is going to provide you. A lot of times you may contribute 5 and they might match 3 or 3.5, or maybe they'll do dollar for dollar up to a certain amount. I've even seen some companies that do dollar for dollar, or sorry, 50 cents on the dollar all the way up to the maximum amount you can contribute, which is just awesome. So whatever that is for you and your company, make sure you know what that match is and make sure you're taking advantage of it. Obviously, if we can contribute $1 and get $1 back out of it, that is hard to do with returns alone. So take advantage of a match, make sure we're getting the full effect there. Second thing is to make sure you know or look at if you have a Roth option within your 401k. Especially these days, many, many more 401ks are offering Roth options, which allows you to contribute after tax. So you got to pay taxes on those contributions, but all the growth, all the earnings forever and ever, at least as it stands today, is tax-free. So that's really important to pay attention to as well. And one thing I'll mention to tie back into point 1 is if you do have a Roth option, the match generally is not, it doesn't matter which side of the 401k you can contribute to. So if you have a Roth and you contribute to the Roth option, you should still get a company match, but that should almost always go to that pre-tax bucket. Third thing to consider is the 401k the best place to invest? So again, I would definitely suggest taking advantage of a match, but a lot of folks that we work with may be looking at retiring earlier, or may be trying to save more than a 401k may allow. And so you may want to look at other avenues as well, maybe something that's more flexible. You might not get the same tax benefits, but that way maybe you can look at your early retirement, or maybe use that a little more effectively in the future where not everything is taxable income too. And fourth consideration is making sure you consolidate old plans. A lot of people we run into will have 401ks all over the place from old employers. You can either consolidate those into your new 401k plan, or most people will consolidate them into an IRA, either working with an advisor or on their own, but that way they have a little more options as well. Sometimes there may be high costs for that, but certainly that consolidation and that flexibility can give you some more opportunities as well. So again, take advantage of the match. Do you have a Roth option? Is there other places you should be investing besides just the 401k? And then consolidating any old plans to help bring things together. So hopefully that was helpful. Again, happy National 401k Day tomorrow. Sounds really silly, but either way, brought us a good topic for our question of the week. We'll see you next Thursday at 3 p.m. and definitely reach out if you have any questions. Again, I'll send you a copy on me if we end up using yours in our weekly updates.